All right, let's get right into it. Today, we're going to pull back the curtain on something that pretty much everyone is curious about. What do the ultra wealthy actually do with all that money?
If you're picturing some kind of Scrooge McDuck-style vault filled with gold coins or a bank statement with a ridiculous number of zeros, you're not alone. But that image, it couldn't be further from the truth. The reality is way, way more interesting.
So, we're going to start by tackling one simple question that basically unlocks this whole mystery.
It seems so basic, right? I mean, where do you physically put millions or even billions of dollars? The answer is the absolute key to understanding how wealth isn't just stored, but how it's actively grown and protected.
And look, this isn't just some abstract thought experiment. As this comment from a Reddit finance forum shows, real people are genuinely trying to wrap their heads around this. It just shows you the huge gap between how most of us handle our money and the pretty complex world of high finance. So, first things first, we have to completely dismantle the biggest myth of them all, the idea that wealth equals a pile of cash. This slide really just nails the fundamental shift in thinking you need to make. On the left, you've got the myth, money just sitting there, literally losing value to inflation every single day. On the right, you have the reality, wealth as a living, breathing thing, a portfolio of assets that are constantly working, constantly growing. That is the entire game. And this comment just hits the nail on the head. Think about it. Cash gets eaten away by inflation and earns almost nothing in a bank account. So for the wealthy, holding on to huge amounts of cash isn't an asset, it's a drag. It's actually costing them money. Real wealth is held in things that grow, businesses, properties, stocks. In other words, assets. Okay, so if it's all about assets, what does a modern high net worth portfolio actually look like? The answer might surprise you. So check this out. This data is from a UBS report on what they call family offices. Those are the private firms that manage money for the super rich. And it is incredibly revealing. Now, yeah, over half is in traditional stuff we've all heard of, like stocks and bonds. But look at that massive 42% slice dedicated to something called alternative assets. For most people, that's a huge departure from a typical investment portfolio. So what is all this alternative stuff? Well, as you can see, it's a whole mix. We're talking commercial real estate, art, gold, hedge funds. But the really big piece of this puzzle, the thing that acts as a real engine for wealth creation that most people have zero exposure to, is private equity. Okay, so owning these assets is one thing. But the real genius, the power play, is in how they're used to fund a lifestyle without ever actually having to sell them. And this brings us to a really powerful and, yeah, kind of controversial strategy. Before we dive into that strategy, it's really important to get what makes these assets so powerful. We just mentioned private equity is a huge part of their portfolio. So what is it? Well, put simply, it's investing in companies before they go public on the stock market. It's a long-term game, for sure, but it has the potential for absolutely huge returns, which makes it the perfect foundation for the strategy we're about to break down. And there's a good reason for this, As the financial analyst at Arda put it, savvy investors flock to private equity because, historically, it has just crushed the performance of public markets. It's a cornerstone of building serious wealth for those who can get in on it. So how do you spend your fortune without selling your assets and triggering a massive tax bill? You follow this three-step playbook. First, you buy assets that grow in value. Second, instead of selling them, you borrow against them. You take out low-interest loans to pay for everything, yachts, houses, whatever. That loan isn't considered income, so it's not taxed. Finally, when you die, your estate pays back the loans, and your heirs inherit the assets, often with what's called a stepped-up basis, which effectively wipes the slate clean on capital gains tax. It is a masterclass in tax efficiency. Now, I know this might sound like some kind of secret financial alchemy, but as this Reddit user points out, the basic principle is actually familiar to a lot of us. It's basically a mortgage. You're using a valuable asset, your house, to get a loan. The super rich are just playing the exact same game, but on a much, much grander scale, with a whole portfolio of different assets. And all of this brings us to the final act, the end game. Because it's not just about getting rich or even staying rich. For so many, the ultimate goal is making sure that wealth lasts for generations. But building a legacy is way harder than it looks. Get this, a staggering 25%, that's 1 in 4, of all wealth transfer failures happen for one simple reason. It's not bad investments, it's not a market crash, it's that the heirs, they just aren't prepared to handle it.
And this is why the smartest families know their work is never done. They focus on building a whole culture around their wealth. This means teaching the next generation about financial literacy and family values. It means setting up clear systems for making big decisions together and even having formal plans for handling disagreements. They get that you can't just pass on the assets, you have to pass on the system and the mindset to manage them.
So it really leaves us with a final thought, doesn't it? We started by asking where the rich keep their money, and we found out it's not really in money at all, it's in assets. And so maybe, just maybe, the most valuable asset of all isn't a stock or a business or a piece of art, but the plan, the multi-generational plan that makes sure it all endures.